Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in today's free video I want to look at both sides of the Nasdaq. Now, I'm not looking at the Nasdaq itself, not the actual index, but I'm looking at some key components of it and how I'm trying to balance my exposure inside that. Obviously, Wednesday was kind of a big day to the upside, Thursday was a big day to the downside, and having some balance inside of that is helpful. Now, when you look at the 4-hour chart of Apple, it might be very easy to look at this and say, well, isn't the momentum of the squeeze moving lower? And it, in fact, is. But one of the main things I try to do with these is trade with the trend. You can do that by either using some broad moving averages, or you can use it just by recognizing patterns of a high, a low, a higher high, a higher low, and the pattern repeats. And as long as that remains intact, I would focus on continuing to play it to the buy side. This chart also has a really good example of coming back and saying, okay, yeah, Apple has gone through a decline here lately, but is that decline outside the scope of what it's done before? It's actually right in line with it, which is one of the most helpful aspects of symmetry. So as long as Apple can continue to hold above this 111.60, I will continue to look to it for bullish exposure right alongside Google. Now, Google hasn't been quite as clean, but this is also something that shares a fairly nice pattern on the daily chart, and you have a squeeze that is fired long and still continues to hold that 21 EMA. So those are the two names that I'm continuing to focus on to the buy side. And then for Netflix, this is where I've been looking to the short side. There's a lot of different ways to look at this chart, but if you come back and take a broad approach to it, the way that it has continued to and of course anything can happen. You have to always give yourself that, that risk control or that acknowledgement that this could be wrong and it could move back higher. But I like the way it has generally been doing a very good job of respecting the 200-day moving average. The parabolic stop and reverse is a very handy indicator for helping predict direction in a given squeeze. You also have what I've been referring to as the post-earnings trauma, where you can see this is the level that we had prior to their last earnings, and every time it's been getting back up there, people have been more than happy to unload those. So I'm looking for Netflix to roll over. Accumulating those bearish positions into earnings is one way to do it. That way you can ideally benefit off the implied volatility as well, and hopefully get the direction right also. And I also like the idea of looking at things like, and you can stagger this throughout a series of expirations, but if you look at this and say, to me it's a little bit more of a mixed chart, well then maybe you want to consider something like the 98, 95, 93, or actually the 92 to keep that balanced. And look at that as a butterfly. Now the way that I would do that is on the put side, utilizing this as being your short contract, and that is a good way of having a little bit of bearish exposure, but still utilizing that short 95 put, and I would be willing to put that on in every series of options right until earnings. You don't want to do that on the earnings series because you don't want to be on the wrong side of implied volatility with that short 95 put. So I hope that's helpful. Gives you a couple of ways to think about positioning yourself as we head into the next couple of weeks. I also wanted to make sure that you are aware of a free webinar that we'll be having next Wednesday on trading the election. John Carter and Rogi Horner are two of the best macroeconomic views that I've ever had the pleasure of listening to, and I feel like this is a good foundation for me because I always focus more on technicals. It's just the way my mind works and what I find to be easier for myself. But having this as a foundation in my analysis and being able to capitalize on what could very well be some significant moves is the whole reason why we're here. So if that's something you're interested in, I think you will find it very beneficial. That webinar is going to be next Wednesday, October 5th at 7 p.m. Central Time, and I hope to see you there. You guys have a great night, and I'll see you at the next free video.